Hopefully you printed this off and you have it in your folder that you can use as a resource. We're going to look at three different examples of taxes: a progressive tax, a regressive tax, and a proportional tax. And hopefully if you understand what those terms mean, that will help you to understand the tax a little bit more. A progressive tax means that the percentage is higher or progressively gets higher as your income goes up. So as your income progressively goes up, so does the percentage of your income that they are going to take in this tax. So here we have two different income levels, $150,000 and $30,000. And so a perfect example of a progressive tax is the federal income tax. The more you make, the higher percentage they're going to take out of your check. And so a household that makes $150,000, they're going to have to pay 30% of their income towards this tax, which is going to be $45,000, and then afterwards they'll have $105,000 left. A family who makes $30,000, they're only going to take 15% of your total income, which is $4,500, and then you'll be left with the $25,500 left. This next example here is a regressive tax. And so let me move this up, sorry about that, so you can see hopefully all of this a little better. Okay, so what we have here is a situation where you have the same income levels, $150,000 and $30,000, but not all of that is being used towards or being calculated in a specific tax. So a perfect example of a regressive tax is a sales tax, and this can be very confusing, and we're going to do some math on this later. But what you have to understand is we're not talking about the percent that you pay on sales tax right now at 7%. What we have to calculate is once everyone has paid that sales tax, how much of that is your income? And I know that kind of sounds confusing, but when you look at this, you have an income level of $150,000 and an income level of $30,000. What we're saying is that let's say each one of these couples or families bought $10,000 worth of stuff that they have to pay towards a tax. So they're going to pay the exact same dollar amount. So a lot of people want to say that this is a proportional tax because I bought $10,000 worth of stuff. I paid a 6% tax on that, which came up to $600, and this family bought $10,000 at 6% and paid $600. But what you need to do to actually figure out what their effective tax rate is, you have to figure out what percentage that is of $150,000. So when you do the math, and it's tax over income, so to get this, we would just take $600, which is the amount you paid in the tax, and then divide that by your income. So this family makes a lot more money, so that $600 is only 0.4%, less than 1% of their total income. But this family here paid the same dollar amount, but when we do the math, divide it by their income of $30,000, it's actually 2%. So before in the example, the person making a higher income paid a higher percentage of their total income towards that tax. On this example, if both families are buying the same exact things, paying the same percentage, paying the same dollar amount, that does not equal the same of your total income. It's only 0.4. So the person with the higher income is actually paying a lower percentage of their total income towards that tax, and that's why it's considered regressive, because the person making the least amount is paying a higher tax than the person making more. So we will do some math problems with that. Just know and understand a regressive means as your income goes backwards, a regressive, the percentage that you actually pay is more. And then the last one here is a proportional tax. An example of that that I use is the Indiana state income tax. It doesn't matter if you make $10,000 a year, $10 million a year. They are going to take the same exact percentage. It's proportional. It is the same for everyone. So in this situation, you have $150,000. They're going to take 4.4% of your total income, which is $6,600. In this case, They're going to take 4.4% of your $30,000, which is $1,320. And so this is how much you have left over after they take that tax. So everyone is paying the same proportion on their income, which once again is different than the sales tax because most people don't spend 100% of their income on things that they have to pay a sales tax. We will do lots of math with this, but just for now, a progressive tax like the federal income tax, the higher your income, the higher the percentage. A regressive tax, and I'm going to point this out right now, almost all taxes are regressive because if a rich person and a poor person bought the same exact thing, paid the same exact percentage, whether it's property, whether it's sales tax, whether it's an excise tax, it doesn't matter. That tax is going to have a larger impact on a lower income family than it does on a higher income family. So the reason we have a progressive federal income tax is kind of to make up for the fact that most taxes are regressive. So if most taxes are regressive, but the federal income tax is progressive, the whole entire goal is to make sure that people are paying roughly the same percentage, which would be proportional. So let me know if you have any questions.